Hello, Kurt Jackson, your safe money man here today with today's financial question. Hey, have you thought about what would happen to your money if the worst bear market in history happened again? Like, I know what you're thinking, Kurt. Why are you being so pessimistic? I understand that. Yet, if you know me, you know I'm not really a pessimist, but I'm more of a realist. And as your safe money man, you know I'm always looking out for ways to help you protect what you have, and while helping to build what you want. Right? So the realist in me wonders, what would the worst bear market in history do to your portfolio? Which carries with it what your lifestyle would be in retirement. Now, what was the worst bear market in history, you ask? Well, most would argue the worst bear market started at the crash of 1929 and didn't recover from its market high until the fall of 1954. Thus, was a 25-year bear. I know that's negative. It's generally accepted a bear market's a 20% drop in broad market indices such as the Dow Jones or the S&P 500 over a 2-month period. Bear markets are a time usually of deep pessimism, falling stock prices, and usually high volatility. A bear is not to be confused with a correction, because a correction is usually a short period of time, something less than 2 months, while a bear is usually 2 months or longer. There were two very large and very long bear markets in the 20th century. As I previously mentioned, the 1929 crash, which lasted to 54, and then there's the 1965 to 1982 bear market. Most seniors remember both, and boomers definitely remember the gas lines of the 70s bear market. Hey, Russell Napier, in his book, The Anatomy of a Bear, says on average, think about this now, folks, every 3 years there's a bear market, and every 8 years there's a stinker of a bear market, and big bears last an average of 17 years. Napier also says the bear market that started in 2000 would not end until 2011 to 2014. Because even though the market's performed nicely since March of 2009, where it hit our lows, it's still around 15, 16, 17% or below its high. I know, that's once again negative. Hey, Harry Dent, a well-known author and economist, he thinks we could see the Dow drop back down to 3,800 by 2014. And as I record this, the Dow's about 12,685. So dropping to 3,800 would be a 70% drop. Well, what would that do to your retirement account? What if something like that happened right before retirement, or God forbid, during retirement? See, everyone knows the old investing axiom, buy low and sell high, right? Which means find the bottom of a bear and invest, and then sell at the height of the bull run, thus maximizing your gains. And if you can do this, you can retire wealthy beyond imagination. Sounds easy, doesn't it? But it's not. It's incredibly difficult. In fact, Napier's book is all about trying to find the historical commonalities that run through bear markets, so you would be able to estimate when the bottom of the next bear is and invest. John D. Rockefeller is reported to have said, the way to make money is to buy when there's blood running in the streets. And I believe this means you ought to buy when everyone else is selling and sell when everyone else is buying. Warren Buffett says, we simply attempt to be fearful when others are greedy and to be greedy only when others are fearful. Again, it sounds like good advice, but how does the average investor know when everyone else is selling or everyone is buying? Isn't that just a guess anyway? And if it's so easy to do, why isn't everybody making money? Have you ever heard Warren Buffett's 2 main rules of investing? Rule number 1 is not to lose, right? And rule number 2 is to not forget the first rule. Losses in your retirement portfolio are devastating. They take up valuable time. It took many years to build up the wealth that you lost, and then it's going to take you years and years to rebuild that wealth if you ever do. Remember our not too distant history where the market was down 44% from 2000 to 2002. Then remember when the market was down about 59% from 2007 to 2009. Now I know the market's back up quite a bit, yet the economy's not really in good shape. Even though the unemployment rate is supposedly around 9%, there's numbers saying that upwards of 20% of people that are they consider to be underemployed or really have just given up looking for jobs. The jobs that have been created under this current administration are really lower paying jobs, and they're not even creating enough jobs to even absorb the recent entries into the job market, namely college graduates. Next, if you mix in the gas prices and all the unrest in the Middle East, the budget deficit our government's running, our national debt, which is over $14 trillion, and that doesn't even factor in the more than $100 trillion in promises to Social Security, Medicare, and Medicaid that we haven't funded, and we really have no mechanism to fund. Does that sound like the market should be up? Could it be that the market is up on smoke and mirrors, or that it's being somehow manipulated by Wall Street? Look, I don't know what's going to happen in the market. Do you? Do you think your financial advisor knows? How about the manager of your 401k or other retirement plan? How about the person running the mutual funds you have? How about the bond fund manager where your bonds are? I don't know when it's going to happen, and they don't know when it's going to happen. So if none of us know, is your money safe? Are you taking more of a gamble with your money than having a safe savings plan? See, I think all those folks, as well as the behemoths on Wall Street, they don't want you to know that there are other options that are safe, other options that keep you from losing money when the market tanks, other options that let you share in a market gain up to a cap. And really, doesn't having a cap on earnings make sense if you don't have the risk of loss when the market index is down? Other options maybe offer some guarantees. Other options are guarantee your loved ones will have more money than you had saved no matter when you die. See, I think deep down most of us are conservative when it comes to our money. I mean, if you had a choice between risk and safety, wouldn't you prefer keeping your money safe? Most folks mistakenly think the only safe option is bank CDs or money market accounts that don't pay hardly anything. Or worse, they're buying Wall Street's pixie dust that proper diversification means safety. See, they pitch that a properly diversified portfolio of stocks and bonds will help you to mitigate your risk. You know what? First and foremost, mitigate doesn't mean to eliminate risk. According to dictionary.com, mitigate means to make less severe or to moderate. To moderate or to make less severe, that doesn't mean safe. So instead of being down 59% from 2007 to 2009, you were only down 35% because we helped mitigate your risk. You know what? I hate to break this to you, but a 35% loss is still a loss. People also have the misconception that bonds are safe. They're not fixed assets. They're supposed to be fixed income vehicles. But if you own bonds in Enron or any of the other companies that have gone under, even municipalities that went bankrupt, you know that they're not safe. Look, I'm not saying don't be in the market. What I'm saying is to make sure you're managing your risk. If you followed any of my material, you'll know that I'm an anti-risk guy. And look, I could have gone any route in the financial industry. Heck, I conducted more than 7 years of research before I even made my decision to be your safe money man. I did that because, you know what, I couldn't recommend risky vehicles to people and still be able to sleep at night. And I did it because when I got outside of Wall Street's world of conventional thinking, I found that there were several types of vehicles that are able to build enough wealth for you to live the entire life that you want. And they were safe as safe could be. Some of them offer guarantees. Many of them offer guarantees. They offer amazing living benefits if you ever needed them. And they offer death benefits to your loved ones. They have one of the most favorable tax treatments imaginable. And they would allow me to sleep soundly at night knowing that all my clients are safe from the risks of everyone in the market's experiencing. I could sleep at night knowing that my clients aren't going to lose money. So if you're truly conservative when it comes to your money, then you need to know what I know. Because I promise it'll change your life for the better. Give me a chance to prove it to you. Just call Kurt Jackson at 816-582-5532, and let's get you and your loved ones better protected. Hey, thanks for joining me today. I really appreciate it. If you found value in this video, please forward the link to your friends and family. I think what we talk about here is very important, and everybody should at least know about that. All right, well, I want to say best wishes to you and good luck in your financial planning.